Guys, John Paulamy here, Actionable Intelligence. Today is Saturday, September 13th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you individual financial advice. This is for informational purposes only. Please do your own due diligence. It's your money. It's your responsibility. So I get this weekly email from CMG, Steve Blumenthal. I've recommended it before. It's worthwhile signing up for it. But I just have a couple of quotes from this week's email. Uh, if you are already losing confidence in government data, this past week added to your frustration. The BLS, Bureau of Labor Statistics, removed 911,000 jobs from previously reported numbers. The total removed is now 2 million over the last 3 years. It seems that the L should be removed from the acronym. BS data is what we've been getting. Then he goes on, quoting Dr. Lacey Hunt, who is a pretty prestigious economist that is all over the FinTwit and interview circuit. Dr. Lacey Hunt said the repeatedly and loudly proclaimed resiliency in the labor markets was wrong. Many private and public decisions were made on this extremely erroneous data. Wage and salary compensation, total personal income, private savings, GDI, national saving, industrial production, and productivity will all be revised lower since the preliminary data of all these indicators use the monthly payroll job, which so massively overshot actual employment growth. So why am I bringing this up? Well, next week we're going to have probably the beginning of the Fed's rate cutting cycle. And I think that this is what I think is really going to supercharge um, some of the areas that we're involved with. I track worldwide central bank actions, and the rest of banks have been cutting rates for 2 years now. And the US is way behind the power curve. It's the last major central bank that hasn't really begun cutting rates. And so what's going to happen? We brought up before and have shown the chart. I don't have it this week, but in previous rate cutting cycles, that usually hasn't been bullish for stocks in many cases. It can be if the economy is expanding, but it looks like we've been operating with data that's not correct. And so are we actually in a recession or a slow growth period? That's a reason why the Fed starts cutting rates. It's because the economy is weakening. Employment, unemployment's rising. So this typically isn't good for earnings in companies. And typically, this could be a sell on the news event. A lot of people are going to be, I think, this is what we've seen in the past at least. Um, for the things that I am concerned about, like emerging markets, precious metals, commodities, hard assets, this will be good because interest rate differentials will shrink. The dollar then could fall further, and we could have further growth in our or impetus and for our investment themes. So um, some of them have gotten ahead of themselves. Gold is really been doing very well. Gold mining stocks are really pushing the upward bounds of their relative strength indexes, severely overbought. I've been saying that for a couple of weeks, yet they keep going higher parabolically, which is interesting because as you'll see as we get into it, the the public's interest isn't really that high. So anyway, long story short, this is all laying the groundwork, I think, for probably interest rate cuts that are going to be this first one's going to be first in a series. And so I think we're going to see possibility of a lot of changes, let's put it that way. So here's Bessent, the Treasury Secretary. The Treasury taking in record tariff revenues, according to Bloomberg. You can see the monthly tariff revenues. Um, there's a lot of back and forth discussions about positive, negative, basically a consumption tax in my view. Um, the other thing I'd say is that there's really no free lunch. Prices are higher than they should be, or they have been. I shouldn't say should be, but have been. Uh, this is probably one of the contributing factors. But we've also seen that because of the currency going down, the US dollar, and the fact that middlemen and producers are absorbing some of the tariffs costs, we're not seeing the full effect of like the 18 or 20% tariff rate. We're seeing more like 7%. Still not good, but again, this is a tax that can be avoided. You just don't consume things that are imported, right? So that's kind of the mentality of the economic whiz kids in the administration. And eventually this will lead to reshoring and all these things. Remains to be seen. But this is interesting that record tariff revenues are coming in. Yet we're seeing record deficits also. I think the deficit for the last month was $385 billion or something like that. So uh, this isn't going to fix the fiscal situation in the United States. So gold miners' margins are an all-time high. A lot of this is because, in my view, that energy prices remain low, relatively low. And the gold price obviously has been spiking. We're what, close to 3,600, I think. Let me see what the last quote is um, that I've seen. 3,641. So yeah, we should be seeing Q3 earnings for the gold miners will be substantial. They were last quarter. Um, a lot of the shares have run a lot recently, but I think that we're in a gold bull market and any pullback should be bought. So um, do we have a large exposure to gold mining in the Actionable Intelligence Alert newsletter? No. Um, I think the best way to approach this, as I've said before, if you're wanting to participate, is if you see any weakness, let's roll the tape back. Unless you're going to devote a lot of time and effort to going through a lot of these companies and trying to understand what's going on, your best bet is just to buy like three or four of the big majors like Newmont, Agnico Eagle, things like that, and just ride this. And you'll do three, four times your money probably if gold goes where I think it's going. If you want to get into the junior space and get the multi-baggers, that takes work. You have to get involved. You're going to have to get a basket of these things, okay? You're going to have to do a lot of research. You're going to have to understand the people running the businesses, the jurisdiction, the geology. Uh, Again, if we get some just move to 5,000 gold and, $75 silver or something like that, um, everything's going to go up, obviously. But these things are very volatile. Be aware of that. They will have pullbacks. That it's just like all the other markets. It's like a lot of the uranium investors have found out. If you looked at the price of uranium and some of the uranium stocks, like Cameco, you've done extremely well holding them for the last 5 or 6 years. But there have been significant pullbacks and drawdowns. And that's, if you're not in now, if you haven't been in, then you may want to wait for a pullback. There will be pullback. These things are volatile. There will be, you know, these things get way ahead of themselves. People take profits. You get 10, 20, 30% pullbacks. That would be the time to enter then. But you should be getting your names together. It's a lot of work in the junior sector to really find, the good companies. So unless you're going to do that work, unless you're going to seek out and, you know, read a trusted analysts that have demonstrated they know what they're talking about, um, your probably best bet just to participate is just buy like one of the indexes, one of the ETFs like GDX or GDXJ. So that would be my recommendation. I wouldn't just run out on Monday and buy gold mining stocks with, like I said, RSIs that are what showing stocks being way overbought. Now they have been overbought for some time, and they can stay overbought. But again, I think you're taking a big chance. And what happens is people get their juices flowing and they run out at the top when everything's in the news and one of these volatile sectors, they buy because they fear of missing out, and then they get rug pulled, and then they, see a 30% decline and then get all upset. So this is a multi-year gold bull market. It's pretty much in the initial innings. You still have a while to go. No need to go rushing out on Monday and buying things that are overbought in the short term. So that would be my advice. But these things are going to be having tremendous margins, and at some point, this is going to attract capital. So I was just saying, this is the GDX, just showing the fund flows. I mean, they're been negative for over a year. Yet gold mining stocks go up. So people are buying them, I think, especially the larger ones, institutions. Um, but the public is still not massively in this yet. And so we'll see what happens. But I think that this is going to flip at some point. AI stocks go up, stonks go up, buy AI stonk. So people are still in that mindset. And as long as that's attracting capital, and remember, a lot of the capital flows are passive, right? Through 401ks and pensions. There's no analysis going on. It's just, a dollar comes in and so much is allocated to the, largest market caps, which happen to be the AI stocks and technology stocks. So at some point, it's going to flip, and public's going to come in big time, and we're going to have a mania. That's when the real big, super big money will be made. That's when you'll see the multi-baggers. Again, here's just another chart showing this. This is the price of GDX shares, and this is the shares outstanding. And that's reason it's going up. So the components of the GDX are going up, yet capital is flowing out of this index. Might be that people are just focusing on the individual shares. So instead of just buying the index, you probably, if you're doing research, you can get a better return just buying the more quality without buying the index, right? You'll have better performance. But then again, that takes work. It's another reason why I think that gold's going to continue moving higher. It's just too much debt, especially in the Western countries. They're just over indebted, and there's no way out. At least in these so-called democracies, um, they're not going to have austerity because you won't be in power. So they'll inflation, creation, all kinds of finagling of currency controls and capital controls, all this neat stuff that we've talked about for the last several years is eventually going to manifest. This will be positive for precious metals. And I think that a lot of the people in the BRICS countries, the global South and East, that have continued to emerge, continue to gather strength, can see what's happening in the West and are slowly but surely divesting themselves of these debt obligations of the West because they're just not going to be paid. They understand that. Or if they are paid, they'll be paid back in most likely, uh, depreciated currency units. So we know the U.S., I'm looking at the UK. It's a disaster financially. This is the UK budget surplus deficit going back to 1700. You can kind of see recently what's been happening. Um, you can see that during the various war times, how it blew out. French Revolution, Napoleonic Wars, World War One, World War Two, and yet you're in deficits of when the British Empire. You're running the same level of deficits as when the British Empire was, fighting major wars, and they don't really have any major war going on. Yes, they're kind of at the periphery of the whole Ukraine conflict and instigating a lot of things from their historical narratives of their hatred of Russia, I guess. But there's no full-blown war going on, and yet this is what you have. And I'm going to talk about that later on, of why this is important. You've seen the same thing in France. French government collapsed recently. Same reason. I mean, fiscal situations are out of control. Germany, uh, same, is not as bad, but heading in the wrong direction. It's just you know, a mess. So I wanted to talk about again, you should really get on Twitter when you're on Twitter. You should be curating this, Dan. Uh, I can't pronounce his last name, but basically Energy Tidbits. A lot of good stuff he puts out. I got a lot of slides from him this week. But this is basically from Oracle this last week. You saw the stock jump 33% earlier in the week. Um, it's talking about AI Data Center 101. For the next decade, nat gas and coal will be the primary source for 24/7 power needed by AI data centers until nuclear can scale up. It says Oracle plus 33% in pre-market, driven by huge backlog and outlook for AI data center. Quote, this is from the Oracle folks. We expect multi-cloud revenue to grow substantially every quarter for several years as we deliver another 37 data centers to our three hyperscaler partners for a total of 71, basically, data centers. And so again, where's the power going to come from? We've been talking about this. Now, there's a lot of skepticism about where AI is going to generate revenue, if all this investment is malinvestment. They're all very possible. It looks that way now. But how are these people that are investing hundreds of billions in total, trillions of dollars going to recoup their investments? This has so much shades of all this fiber that was laid during the internet bubble, the telecom internet bubble. People were laying fiber everywhere because we needed all this fiber optics, which eventually did get used, but the original owners and people that put it in went bankrupt and the assets were bought by other folks. So again, we've talked about this in the past. So we'll see what happens, but this is one of the issues. If it continues, they continue to throw money at this. The growth in electricity demand, which we've talked about in the past, is going to have trouble being fulfilled. So this was Javier Blas in Bloomberg this week. He writes a lot. He's pretty good analyst, but because he writes for Bloomberg, he's got to carry the climate change torch, I guess. But anyways, these are some snippets. Basically, the IEA is coming out this week, coming out soon, or has come out and said basically this whole idea of peak demand that was going around for several years that the IEA was pushing is going to get revised. That in fact, we're not at peak demand, that demand for fossil fuels will continue to grow for decades. And so here's some snippets from the article. Before I give you the snippets, this is what we've talked about. Reality, physics, mathematics always wins. And all this fantasia about we're going to have this utopia and renewable. I worked in renewables. It's not going to be able to supply, okay, what's required. It's just that simple. And if you were actually on the job sites and working in the companies that are doing this, it's just a circus. It's obnoxious that people, it's just a perfect example of people not having relevant information. It's so flim flam and quick buck artist. It's unbelievable. And yet people thought that this was going to be the thing going forward. Uh, we took the other side of that, and looks like we're right. And we're going to make a lot of money on this because of the underinvestment that happened and a lot of choices that were made because people believe that's nonsense. Anyways, here we go. For the last few years, climate and energy policymakers have convinced themselves the world was inexorably moving away from fossil fuels. Breaking news, it is not. That's coming from the IEA now. Believe me, who is all in globalist, renewables uber alles. Okay, continuing. Under current policies, quote, oil and natural gas use rise out to 2050. Say that again. Oil and natural gas use rise out to 2050, according to the IEA draft. Coal consumption does peak in the 2030s, but demand in 2050 would be more than 50% higher than previously expected, according to my calculations based on the draft. For oil, the consumption curves under the rescued CPS show continued growth, including even in the 2040s. Its annual growth over the next 25 years is well below the rate seen historically, but oil remains the largest single fuel in mid-century, the draft says. Renewables come second, with gas and coal in third and fourth place. And of course, nuclear is not even mentioned because it's so small, yet growing. This is interesting because if this is actually what going to be the new zeitgeist, then investment's going to shift. Investment flows, money flows are going to shift. Okay? There hasn't been enough investment. Where are you going to get all the oil and coal and natural gas and all these things? There's plenty of it in the ground, but there's been this huge investment gap because we've had this delusion and this fantasy for the last decade plus that we were going to run the world on renewables. It's stupid. So that's how you make money. That's how you speculate successfully. You take the other side of ridiculous arguments, find the premise that is wrong, and take the other side. This premise was always wrong. Now, has it played out like in actual increases in share prices? In some cases, yes, but not all. People will point and say, well, you've been talking about the oil producers for a while and they've been down. Yes, but we've also been talking about some various subsectors of oil service, which have done tremendously well. I've got some 3 and 4 baggers. And so if you do the work and you understand what's happening, then you're going to do well. You have to understand it doesn't matter what I personally think about, climate change and renewables. It matters what all of these consumers. I go back to what the Minister of Energy said in India when he was being castigated by some nitwit bimbo reporter from Bloomberg that thinks she's, knew what she was talking about. You continue to buy Russian oil at a discount. Why do you do that? Don't you understand what's happening, what you're doing? He said, I have an obligation to the 1.4 billion consumers of oil in India. That's where my primary that's my primary goal, in paraphrasing, is as energy minister of India. These people don't get it because they have tied themselves to globalism, because they have tied themselves to this, the world is bigger than the nation, and that's where my responsibility is. No, your responsibility is to your nation. That's how the global South and East thinks. And that's where the dichotomy is. That's where the conflict is. Global South and East is what matters. The West doesn't matter anymore. It's self-immolating itself. This bothers a lot of people when I say it. That's one of my main investment themes. Power is shifting from the West to the global South and East. It's that simple. That's going to be fueled by fossil fuels. They have not been invested in sufficiently. Therefore, the price will be going up a lot higher than people can imagine. That's my investment theme for the next decade plus. So here's some Tracy Schuchart. Oil exploration capital has been shrinking at an alarming rate since peaking in 2013. Combined exploration capital for these 10 large oil companies that are shown here have shrunk 71% from 37.6 billion in 2013 to a mere 10.8 billion in 2024. Yes, we've cataloged this many times. We've discussed the reserve life indexes. We've talked about this ad nauseum. You've had now a decade plus of underinvestment. So you had this big peak in investment mid-decade, last decade, and a lot of that stuff came online, and you've been living off that now. And now, because it's an extractive industry, those investments are no longer providing enough fruit. They're in decline. And so we've not been investing enough because all of these companies, look at them, Total, Shell, uh, BP, a lot of them have been caught up in this hysteria where their managements for some periods of time were totally dedicated to going, for example, with BP, beyond petroleum. They were going to phase out petroleum by 2050. Well, all those managers have been swept away, but the investment didn't happen. So there's been this huge chasm, if you will, of a lack of investment that's going to result. This is just 10 of the largest oil companies, okay? Non-OPEC oil investment has been down. The other factor is we've been relying on shale. That's peaking. That is, being realized now for many reasons. Geological, water issues, co-produced water, a bunch of issues. Okay. And so we can't rely on ever expanding cornucopia of US shale growth. It's not happening. So this goes on again. Oh, I guess put this twice maybe. Okay. Seems like I put this in here twice, the same chart. Yeah, unfortunately. Okay, we'll go beyond that. Okay, so I say here, meanwhile, what's going on in the Permian? Talking about the water issues. Devon in the last couple of weeks talking about this. Devon is another to highlight Permian wastewater disposal is an absolute critical path item for producers. Devon CEO, quote, it does not matter if you have pipe or even if you have wells. It's talking about water disposal wells. If that pore space is full, you're done. Quote, water, as you mentioned, it's another absolute critical path item to make sure we have the ability to do what we do. And so this is why I'm so bullish on companies like Texas Pacific Land and LandBridge. They've invested a lot. They're making a lot of money on water disposal. And there's a unique situation between New Mexico and Texas, how LandBridge has bought a lot of land along the state lines because there's different rules in each state that they're taking advantage of. The Devon CEO also goes into, if you listen to the conference call, talking about the fact that the utility down in New Mexico can't supply enough electricity for all the infrastructure that they've had to put in. And so Devon has had to go out and create its own microgrids and generation to power its wells and processing facilities because the utility in New Mexico and also because the regulatory authority there can't keep up with what's going on. So this idea of never-ending shale oil growth is not happening. And why are you having more and more water? Well, because I think it was the management at TPL or one of these folks, maybe it was an analyst on the call, I can't remember. Basically, when you're dealing with these shale wells, you're dealing with a water well that has oil in it. That's how they describe it. You have tremendous amounts of water being produced with this oil, and you have to do something with this water. It's not water that you can just, treat and it's hundreds of thousands of barrels a day of water, and you have to do something with it. It's contaminated with heavy metals, it's brackish, it's all kinds of issues, and so there's a big scramble. I know both TPL and LandBridge are both looking at ways to process the water, reclaim the water, not just pump it down in the ground because it's causing earthquakes and you're running out of space. So it'll be interesting to see what happens. So there are limits to what can happen here. And not only the fact of geological limits, but as the oil, the oil amount of oil drops, you get increased water. And so this is going to be an issue. Here it says right here, right from the Devon CEO, it does not matter if you have pipe or even if you have wells. If that pore space, he's talking about the actual space of the wells, is full, you're done. So water is another critical path item to make sure we have the ability to do what we do. And it's not just Devon. Here's Coterra. Permian wastewater is an emerging and serious issue, says Coterra CEO. Quote, I will say it generally a basin-wide phenomena that sale or disposal in Delaware Basin and really the larger Permian Basin is an emerging and serious issue, unquote. Injecting into shallow zones. Quote, that pore space is limited. There will be a point where that pore space fills up, unquote. So we're optimistic that we can manage this and get it behind us. So we'll see. We'll see. This is an emerging issue that needs to be watched. But again, there's companies, this always provides an opportunity. If you look at the water handling revenues for both TPL and LandBridge, well, you can get a sense of what's actually going on. They're providing an answer for this. It's I think an unanticipated revenue source. It's really growing. So something that's very interesting to look at. Again, Permian's not going to bail out the world. This is why everybody's going offshore. This is why I'm so bullish on offshore oil over the next generation, basically. That's going to be where the growth for oil supply comes from. And that's very expensive. It's very long lead time. and the industry that supports offshore drilling, construction, and production is atrophied so much that when a large amount of capital comes in, which is inevitable, these companies have shrunk so much, they're going to do tremendously well. You can look at the backlogs of several of the companies that do underwater construction, do specialized services, make blowout preventers. These companies are booming. Their backlogs are in the billions of dollars, and yet, you know, people ignore these companies. They're in boom times. So this is from Ocean Wall. They have this new site on Substack, the Daily Hoot, I think it's called, but you might want to check it out. This is behind the paywall, the full article, but I just like this part that they was public. We don't want to ignore India when it comes to nuclear power. Again, the global south and east. Watch what they're doing. Again, this is not just a Chinese story. It's an Indian story. It's a Russian story talking about nuclear power. It's a Middle Eastern story. It's more and more of the global south and east see nuclear as a centerpiece of baseload power production. Can't just rely on coal and natural gas for a lot of these countries. It says Prime Minister Narendra Modi has placed nuclear power at the center of India's energy strategy. Under the National Nuclear Energy Mission, his government has committed to boosting capacity from today's 8.88 gigawatts to 22.48 gigawatts by 2031, with a long-term target of 100 gigawatts by 2047. Scale of ambition reflects both urgency and necessity. Coal still supplies roughly 70% of India's electricity, while solar and wind, though expanding rapidly, cannot alone provide the firm, round-the-clock base load required to support industrialization, AI infrastructure, and rising household demand. Nuclear is being positioned as the anchor that can stabilize the grid at renewable scale. Well, we'll see. I go back to what I've said before. Where is all of the uranium going to come from? This is your opportunity. The world's going nuclear. It's without said this over and over. And so it's country after country. Uh, and again, this is something that the US is trying to ramp up because we just sat on our duffs for 40 years and didn't do anything, 50 years. And now we've finally woken up. Again, I think a full court press like the interstate highway system or the space program, and we made them national priorities. President coming out and giving a big speech about it, and going on and tying it to what we've done in the past, how we were builders, how STEM, how this can do that. It can just the overwhelming spillover effects of building 100, 1,000 megawatt reactors in the next 10 years, which we could do if we made it a national priority. Because we have done big projects like this before, and a lot of people are negative, but we could do that. The spillover effects would be you couldn't even measure them, I don't think. They would just be untold. And so hopefully we'll see something like that. But again, where's the uranium going to come from? So I wanted to talk about the global South and East, the rise of it. I've been talking about it. It's one of my main themes. A lot of people in the US who are US centric or uh, part of the, shall we say, commentariat, intelligentsia, what have you, the mainstream media, they poo-poo these ideas. I remember showing in one of these videos probably 5 or 6 years ago, the Chinese space station, um, how they were advancing, talking about all those things. Well, Chinese Communist Party, yes, they're rivals. Yes, their form of government is different than ours. Yes, if you go there, you know, it's people when they go there, they seem to have their views are different when they come back than what they thought when they first went there. Perceptions change. And what I see is the global South and East growing. And as they become more economically powerful on a purchasing power parity, it looks like China might be the biggest economy in the world already. Yet it's going to collapse. I've been hearing Kyle Bass say this for 15 or 20 years now, and other folks. Okay. Does it have problems? Yes. Is a centrally planned economy the best way to run things? Probably not. Do they have bubbles there? Yes. But, they are continue to flex. We have different people in the commentary that they make whole careers out of poo-pooing China. I wouldn't do that. And so this is something I didn't even know was going on. So it's like third Chinese aircraft carrier enters service, five more under construction. Breaking. China's third aircraft carrier is about to enter service, a major leap in naval power. This cutting-edge warship boosts China's defense capabilities to new heights. And so I think that, these aircraft carriers are a relic of World War II and the Cold War. But for power projection, you see how the U.S. uses its naval power. Um, are these people making the same mistake that the U.S. is in building these things? Well, it's probably sufficient for its waters around where it's at and projecting power in its sphere of influence. But, as missile and drone technology advances, they probably aren't the best investment. But this is kind of a prestige thing too, I think. You know, you got three and you got five being built. I mean, that kind of puts you on par with the US. So this is another reason why I talk about the Don Roe doctrine, how we're falling back into our own hemisphere. This is why you're down there monkeying around in Venezuela and things like that, and Department of War, and trying to, understand that we don't have the military and economic power to control the rest of the world. It's slowly fading. And so I think some people are starting to recognize that in the US. But a lot of people are going to be fighting the last war and believing things that aren't true anymore. It's not what you don't know that gets you in trouble. It's what you think is true that isn't true that gets you in trouble. And there's going to be a lot of people, there's going to be people in the comments moved every time I talk about the global South and East and the positive things that are happening and the challenge it is to the Western hegemon. Why don't you move to China or Russia? They'll say. No, I'll keep living here in South Texas. The U.S. is still a good place to live in pockets. It's a continent. You don't have to live in a blue city and be victimized by crime and all the other nonsense. I basically live in North Mexico. I'm fine with that. Nothing really happens down here. And, so far, so good. But, so I'm not going to move to China. Do I think, but what I'm trying to tell you is that this 4 or 5 billion people in the global South and East are not going to be held back by the US and the UK and NATO. That's over with. You can see it. If you can't see it, then you just, I don't know, you have clouded vision. If you can't see what's happening in Europe, that Europe is basically a vassal continent of states that's controlled by the US, does the US's bidding, and is in terminal decline, then I can't help you. That's what I see. That's what the rest of the world sees. And speaking of that, here's one of Putin's advisors, and I agree with this. There was a gamble made. The West went for it. They were going to instigate this war with Russia. They've got the war that they wanted. It's not going the way they want it to go. They gambled and they lost. And you can see what's happening now. Country after country in Western Europe is on the brink of civil war, of financial collapse. People say, "Oh, you're being uh, hyperbolic." Look at the 10-year bond rates in all these countries. They've went parabolic. These countries are bankrupt. Look what's happening in the UK today. A million Brits marching in the street against immigration and what's going on there. Okay. These countries are on the brink of civil war. The governments there do not have the best interests for their people. They're all globalists. And that means, doing what's better for these supranational entities like the EU and these global corporations at the expense of the people in your own country. It's just that simple. They made their choice. This predatory economic system that the West has had for 200 years is over with. Now, is it going to be replaced with a new Chinese predatory? Probably, because when the Chinese enter a market, profits evaporate, as uh, Louis Vincent Gove says. But we don't know the future, but we know what is happening. Power and economic power and political power is shifting from the West to the East. That's where the gold's going to, by the way. And so here's what Anton Kobiakov, who's a advisor to Putin, says. The West's great geopolitical gamble is entering its decisive phase, yet part of the West, namely Europe, can already be said to have lost. Europe today has effectively been stripped of independence in finance, energy, technology, and political choice. In effect, sovereignty itself. That's exactly true. Okay. You're going to sit here and tell me that it's been a net benefit blowing up the Nord Stream pipeline for Germany as its energy costs have soared and it's in industrial decline. That's a net positive for Germany. What are you talking about? Buying natural gas instead of buying pipeline gas from Russia, which was fueling the German industrial machine. Now you're buying it at higher rates from the US. Hello, where's your sovereignty? Going back to what this guy was saying. Asia has taken over all of the West's functions. The Middle East has become a new financial hub, drawing wealthy Brits away from their island. Manufacturing has shifted to China and Vietnam and is moving further into India and other countries. Today's largest trading hubs are Shenzhen, Singapore, Hong Kong, Dubai, and Mumbai. Technological leadership has gone to the Chinese and the Koreans. Within this framework, in about 5 years, Western Europe will be of no use whatsoever, not even as a consumer market. Yeah, you might say, well, what do you expect an advisor to Putin to say? Take that out of the equation. Is this reflective of what's happening? Yeah, the West is in terminal decline. Can't you see it? So this is why I am bullish on the global South and East. This is where I invest. So far, it's working. I think it will continue to work. It doesn't mean that there won't be pockets and opportunities in the West. There is. I own a company that does bankruptcy workouts in the UK right now. Their stock just broke out. Why? Because you have a record amount of bankruptcies. Just like I think, like there was plenty of people that became multimillionaires in the Rust Belt by disassembling blast furnaces and recycling the steel and copper of the former industrial entities in our Rust Belt. So that, vultures can get fat feeding on carcasses. But unless you see a massive political change and a reorientation where the elites and the governing class in these countries focus on their people and their country first, then this decline is going to continue. And so I am more interested in looking at where things are on the upswing, where the demographics are positive, you know, where the economics are positive. And, people keep saying the same thing. Well, these countries all hate each other. They've been fighting. Yeah, but they have a common enemy, and the enemy of my friend is the enemy. I forget how that saying goes. Okay, and we're going to see more of this, and people are ignoring it. Um, Again, there still are opportunities in the West. There will be. There's going to be opportunities in our hemisphere in Latin America. I think the political change is happening there for the positive. So there'll be opportunities, but you can't just, the days where Warren Buffett said, don't bet against, the United States. I would be careful with that because I'm not sure that's going to be true going forward. We have a lot of issues here, a lot of problems that are currently being masked by a very overbought, stock market. And, everything here is fake. Everything here is fake. And I don't want to get too political on this channel, but this kind of shapes my thinking and my investing themes, and they're working. So I'll continue to do what's working until you know, this is where the value is in the rest of the world, not in the US or the West. Okay, the value is in these other places. So that's what I'll continue to look at. Okay, that's it for this week, guys. Thank you, and we'll talk to you next week.